Good morning and welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help self-employed retirement account holders stop overpaying taxes and start building real retirement wealth. Today's topic is IRS rules explained regarding opening a solo 401k at Schwab using my solo 401k financials plan documents here in 2026, and you can fund it for tax year 2025. So as always, this is your chance to ask questions regarding today's topic or any other topic for that matter. Go ahead and type them over and we'll address those questions as they come in. In the meantime, let's get started here. So it's not too late to open a solo 401k plan for the first time here in 2026 so that you can make certain types of contributions for tax year 2025 by your business tax return due date, including timely filed extension. And these rules regarding being able to open a solo 401k plan in 2026 so that you can make contributions for 2025 stem from the changes in the law a few years ago under Secure Act 2.0. So for certain types of entities, contributions on the employee side can actually still be made here in 2026 for tax year 2025. For others, you're going to be able to make employer contributions and voluntary after-tax solo 401k contributions. So we're going to talk about those various entities as well. We're going to talk about how you can use a solo 401k plan provided by my solo 401k financial to open up the holding accounts, aka brokerage accounts, for that plan over at Charles Schwab. The same thing can be done at Fidelity or other brokerage firms, but we're going to talk about Charles Schwab today, as that's one of the most popular ones that we find our clients like to use. Here at my solo 401k financial, we differentiate ourselves in a variety of ways, and one of those ways is that we let you choose where to hold the funds for the solo 401k plan at. That's why we're so popular, not only with retail clients, but also institutional advisors. So we, here at my solo 401k financial, provide the plan, the compliance support, the IRS required plan updates. However, the funds are held at Charles Schwab as an example. And we're going to unpack that further as well. So you would open the solo 401k plan with my solo 401k financial here in 2026, and we would assist you in opening Schwab brokerage accounts at Schwab, known as company retirement brokerage accounts. Keep in mind that Schwab provides their own solo 401k, which is limited, and what you can do with it, as compared with the solo 401k from my solo 401k financial. So we would provide the plan documents, and then we would help you to open up what's referred to as company retirement brokerage accounts at Schwab. We would draft those brokerage forms for you. You would sign them. We would fax them to Schwab for you. Schwab would then send you an email once those brokerage accounts are ready to be funded. We would shepherd you through calculating contributions for tax year 2025. And then, of course, assisting with ongoing reporting. So regarding the IRS solo 401k deadlines for opening a solo 401k plan here in 2026 so that you can make contributions for tax year 2025, let's talk about how that works, which again is driven by how your self-employed business entity type is taxed. So again, the IRS regulations allow for certain prior year contributions when you open a solo 401k plan for the first time here in 2026. So the solo 401k would need to be adopted by the business tax return due date, including extension. So let's talk about the various entities. So for example, if your self-employed business is taxed as an S corporation, you're going to be able to make both employer contributions as well as voluntary after-tax solo 401k contributions for tax year 2025 if you open the solo 401k plan for the first time here in 2026. So for example, if you open the solo 401k plan by March 15 of 2026, then you can make both employer contributions, also known as profit sharing contributions, as well as voluntary after-tax solo 401k contributions by March 15 of 2026. If you file for a S corporation business tax return extension, so you file an 1120S extension for that S corporation, you're going to have an extra 6 months. You're going to have until September 15 of 2026 to open and make both employer contributions and voluntary after-tax solo 401k contributions for tax year 2025. You notice that I did not mention employee contributions. That's because it's too late to open a solo 401k plan here in 2026 to make year 2025 employee contributions. That's why we were so busy in December of 2025, because individuals that wanted to preserve the right to make employee contributions for tax year 2025, where their business is taxed as an S corporation, and they wanted to be able to make those employee contributions for tax year 2025 here in 2026 by their business tax return due date plus timely filed extension, they had to open that solo 401k plan by December 31st of 2025. So in review, if your self-employed business is taxed as an S corporation and you have not yet opened a solo 401k plan, you can do so here in 2026 with my solo 401k financial, and you're going to be able to make you're going to be able to make employer profit sharing contributions and voluntary after-tax solo 401k contributions for tax year 2025, just not employee contributions. Of course, if you set up the plan already by December 31st of 2025, then you can make employee contributions as well here in 2026 by March 15 or September 15 of 2026 for 2025, if you file an extension. Also, on a side note, if you already have a solo 401k plan at Charles Schwab, for example, that you opened last year in 2025 or prior years, you can actually restate that existing Schwab solo 401k plan to a solo 401k from my solo 401k financial here in 2026. And you're going to be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions, because that plan is already effective and you would just be restating it, upgrading it to a plan for my solo 401k financial that's robust and that it allows for and Roth solo 401k contributions, pre-tax solo 401k contributions, and voluntary after-tax solo 401k contributions as part of the mega backdoor Roth strategy. Now, if your self-employed business is taxed as a sole proprietorship or an LLC taxed as a sole proprietorship, this is where you really want to listen, because the contribution rules are a little more lax. More specifically, the setup deadline. So if your self-employed business is an LLC or a sole proprietorship, or an LLC taxed as a sole proprietorship or a sole proprietorship, then you have until April 15 of 2026 to open a solo 401k plan so that you can make prior year, that is tax year 2025 contributions, all contribution types, employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. This is one of the ways that a sole proprietorship vastly differentiates from an S corp and a partnership self-employed business. That is, that you can make employee contributions for 2025 as long as you open that solo 401k plan by April 15 of 2026. Now, you can also make employer contributions and voluntary after-tax solo 401k contributions for tax year 2025 if you open the solo 401k plan by April 15 of 2026. And then if you file for a tax return extension for that sole proprietorship, so effectively a personal tax return extension, you're going to have an extra 6 months to open the solo 401k plan in 2026. So by October 15 of 2026, and you're going to be able to make employer contributions and voluntary after-tax solo 401k contributions. However, you will not be able to make employee solo 401k contributions because the plan would have had to have been set up by April 15 of 2026 in order to make employee contributions for tax year 2025. So again, this is all driven by how your self-employed business is taxed regarding these contribution deadlines and setup deadlines more specifically. Now, if your self-employed business is taxed as a partnership, whether a standalone partnership or an LLC taxed as a partnership, then you have until March 15 of 2026 to open a solo 401k plan and make employer contributions and voluntary after-tax solo 401k contributions for tax year 2025. If you file a partnership business tax return extension, so Form 1065, then you're going to have an extra 6 months. You'll have until September 15 of 2026 to open the solo 401k plan so that you can make tax year 2025 employer contributions as well as voluntary after-tax solo 401k contributions. However, just like an S corporation, you will not be able to make employee contributions for tax year 2025 here in 2026 unless you had opened that solo 401k plan by December 31st of 2025 for your partnership self-employed business. But the good news is that you can at least make employer contributions and voluntary after-tax solo 401k contributions if you open the plan here in 2026 for the first time by these deadlines mentioned here. Okay, let's take a look at some questions here. Do your team help with the paperwork to ensure we have the plan structured to meet our needs? Yes, that's exactly what we do here at my solo 401k financial. We're solo 401k plan document providers. Our solo 401k plan is drafted for the maximum flexibility under the law so that you can utilize it, for example, for making not only Roth solo 401k contributions as well as pre-tax, but also voluntary after-tax solo 401k contributions as part of the mega backdoor Roth. Our plan is also built or structured to allow for solo 401k participant loans, where you can borrow 50% of your solo 401k balance, not to exceed 50,000. And we'll draft those solo 401k plan documents. It can also be self-directed into alternative investments. So not only can it be invested in equities, but also alternative investments such as physical real estate, precious metals, which are really popular now, especially since gold and silver are all-time highs, cryptocurrency as well, also promissory notes, trust deeds, really any type of alternative investments that's not disallowed under the regulations. And we educate our clients on how to make those types of investments and how to follow the regulations so that they don't subject their plan to a prohibited transaction. We also handle reporting for the plan that require IRS plan updates. The only thing we don't do is hold your funds or sell investments. That's why that's why we have a lot of institutional clients, that is advisors that come to us to open up solo 401k plans for their clients. And then the advisor utilizes the brokerage firm of their choice with the client, whether it's Fidelity, Schwab, Altruist, or the broker dealer that the advisor clears through. We also offer solo 401k plans at the retail level. So we definitely ensure that the paperwork allows for open architecture and that it's drafted for the maximum flexibility under the regulations. All right, again, this is your chance to ask questions and get answers. So go ahead and chat them over. Also, If this information is helping you feel more confident about your retirement future, we would like it if you would subscribe to our YouTube channel, like us across the different social platforms to help us get the word out to other solopreneurs like yourself and other advisors as well. So we've been talking about the IRS rules explained regarding opening a solo 401k with my solo 401k financial and utilizing Charles Schwab to hold the funds, and also opening a solo 401k plan here in 2026 so that you can make tax year 2025 solo 401k contributions for those that have not yet opened the solo 401k plan but do have earned income from self-employment activity from tax year 2025 that they would like to contribute to the solo 401k plan, whether as a pre-tax employer contribution or as voluntary after-tax solo 401k contributions. Let's go back here to some of my prior slides here. We went over these already. Give me a moment here, please. So why Schwab alone is not enough? In other words, why Schwab's solo 401k won't work? Well, one, Schwab provides a basic solo 401k that does not allow for voluntary after-tax solo 401k contributions or the mega backdoor Roth. It doesn't allow for participant loans. It doesn't allow for the auto contribution tax credit either. But you can utilize my solo 401k financial in conjunction with Charles Schwab, where we serve as the solo 401k plan document provider, the compliance provider, and Schwab serves as the custodian of the cash. So they would hold the funds, and only you would have access to those funds. We don't have access to your funds, and that's by design because we don't need access to your account to help you with the compliance aspect of the plan or the setup of the plan. We talked about how you can make tax year 2025 contributions here in 2026 for 2025, as long as you open that solo 401k plan here by the business tax return due date, plus timely filed extension here in 2026. So again, we would create a custom solo 401k. We would draft the applicable Schwab brokerage forms. I'll also mention we can do this at other brokerage firms like Fidelity, for example. And then we would fax those brokerage forms to Schwab along with the plan documents. And then they would open up the holding accounts, aka the brokerage accounts. And then we would shepherd you on how to calculate contributions, make those contributions, and perform reporting. For example, if you perform a mega backdoor Roth solo 401k conversion, we would be the ones that would process the reporting for that conversion, not Schwab. Because remember, the solo 401k would be provided by my solo 401k financial, and it's my solo 401k financial plan that allows for the mega backdoor Roth. Let me pull up some information here and we'll talk about the mega backdoor Roth. It's a very popular strategy, so it's definitely worth reviewing. So a lot of individuals are opening a solo 401k plan here in 2026 by the business tax return due date plus timely filed extension so that they can make voluntary after-tax solo 401k contributions for tax year 2025 so that they can perform the mega backdoor Roth. So the way the mega backdoor Roth works is that you utilize the solo 401k provider like my solo 401k financial, who offers a solo 401k plan that allows for voluntary after-tax solo 401k contributions as well as in-plan conversions to the solo 401k, that is the Roth solo 401k, or to the Roth IRA as a rollover. So when you make voluntary after-tax solo 401k contributions, you get to choose whether you want to convert those funds to the Roth solo 401k or the Roth IRA. Most clients like to convert them to the Roth solo 401k because they want to keep the funds inside the solo 401k plan. The solo 401k plan is oftentimes used to consolidate other retirement accounts. Also, a Roth solo 401k is no longer subject to require minimum distributions. So it used to be clients would transfer the voluntary after-tax solo 401k contribution to the Roth IRA, because Roth IRAs have never been subject to required minimum distributions, which apply once you reach age 73 or older. But with the Roth Solo 401k, it used to be that they were subject to required minimum distributions, but that all changed with the passage of Secure Act 2.0. Actually, Secure Act 1.0 is where it initially changed. So with the mega backdoor Roth Solo 401k strategy, here's an example of a one participant plan. Let's say your self-employed business is taxed as an S corporation. You're the only owner employee in the business. It doesn't employ any non-owner full-time W-2 employees who work 1,000 hours or more. Therefore, you qualify to open a solo 401k plan. So you decide to open a solo 401k plan here in 2026 so that you can make voluntary after-tax solo 401k contributions for tax year 2025. Here, we would help you to open up 3 separate Schwab brokerage accounts. So the plan would be sponsored by the S Corporation. You're a participant in the plan. You are required to have separate holding accounts, aka brokerage accounts, for each source of funds. So we would help you to open up a pre-tax solo 401k brokerage account, a Roth solo 401k brokerage account, and a voluntary after-tax solo 401k brokerage account. You would then be able to make your employer pre-tax contributions to that pre-tax solo 401k for tax year 2025 here in 2026. You can also make voluntary after-tax solo 401k contributions to that voluntary after-tax solo 401k bucket, aka brokerage account. Then we would help you convert that to the Roth solo 401k. So you would work with Schwab and having to move the funds from the voluntary after-tax solo 401k brokerage account at Schwab to the Roth solo 401k brokerage account at Schwab. We would then have you complete our online conversion form so that we collect the necessary information to report that conversion of voluntary after-tax solo 401k funds to the Roth solo 401k. So even though voluntary after-tax solo 401k contributions are not deductible in the year that you make them, the reason people make voluntary after-tax solo 401k contributions is that they want to get more Roth solo 401k funds into their plan indirectly. So we would collect the necessary information to report that non-taxable conversion of voluntary after-tax solo 401k funds to the Roth solo 401k. You're going to want to convert those funds immediately from the voluntary after-tax solo 401k bucket to the Roth solo 401k bucket or to a Roth IRA so that there are no gains. And if there are some gains, then those get converted to the Roth solo 401k because you have to convert all the funds in that particular voluntary after-tax solo 401k bucket. Just those small gains will be taxable, but the bases will not. So that's how the mega backdoor Roth works with the solo 401k. So that was an example of a one participant plan. Let's say you and your spouse are both self-employed in the same S corporation. So if the S corporation would sponsor the solo 401k plan. Both of you can participate in the same plan because you're both working under the same business. So you would each have separate participant accounts. So in this case, instead of only having 3 holding accounts, you would have a total of 6 holding accounts, aka brokerage accounts, because each participant's funds and sources are required to be separately tracked. And you could each make separate contributions to the solo 401k, including voluntary after-tax solo 401k contributions, and then convert them to the Roth solo 401k or the Roth IRA. So that's how the mega backdoor Roth works. And then again, my solo 401k financial, not Schwab, would be the one to issue the Form 1099-R or 1099-Rs if both spouses participate in the plan and process the mega backdoor Roth conversion to report that to the IRS. So for tax year 2025, the overall contribution limit is $70,000. So that's for someone who's under age 50. If you're age 50 or older in 2025, you can make a super catch-up contribution. You can make a normal catch-up contribution of $7,500. If you're age 60, 61, 62, or 63, you can make a super catch-up contribution of $11,250. Now, again, the catch-up contributions, those are only going to be available for sole proprietorships. So for sole proprietorships who open a solo 401k plan here in 2026 that want to make 2025 contributions, they can do so by April 15. But S corporations and partnerships would not be able to make those normal catch-up or super catch-up contributions unless they had opened the plan by December 31st of tax year 2025. Of course, if you open a solo 401k plan here in 2026, you can certainly make year 2026 contributions, all contribution types. Okay, so let's look at some more items here. Let's talk about the auto contribution credit. So with my solo 401k financial, we draft the plan documents to allow for the auto contribution credit. We were the first ones in the industry to offer a solo 401k plan that had the auto contribution credit built into it. We started offering it towards the end of December of tax year 2023. But if you open the solo 401k plan with us on January 1st of 2024 and after, then your plan has already been drafted with that auto contribution credit. And if you're opening a solo 401k plan for the first time here in 2026, we'll draft those solo 401k plans so that the auto contribution credit is built into it. If you're an existing client of my solo 401k financial from December of 2023 and prior, your plan can be upgraded for this auto contribution credit. You would submit a support ticket through our website so that we can add the auto contribution credit to your plan, and you can start claiming that credit for tax year 2026 and going forward for a total of 3 years. So what is the auto contribution credit? Well, it's a dollar for dollar credit, which means it reduces your business taxable income on a dollar for dollar basis. The total amount is $1,500. You spread that $1,500 out over a 3-year period, so in $500 increments. Not all solo 401k providers offer a plan that has the auto contribution feature built into it. Again, we were the first ones to do it, and now a lot of others are doing it as well, which is great. So that's why everybody is qualifying for it. However, Schwab does not offer a solo 401k that allows for the auto contribution credit, nor do most of the other big brokerage firms and banks that offer solo 401k plans. But as I've mentioned throughout this webinar, when you open a solo 401k for my solo 401k financial, we're the plan provider, so we'll draft those plan documents so that the auto contribution credit is built into it. And then you can utilize Schwab to hold the solo 401k funds for the plan that we provide. So with these auto contribution tax credits, the cost of both opening and maintaining the solo 401k plan is practically free for many years to come. Another great thing about the auto contribution credit is that you can opt out of contributing and you still are going to qualify for the credit, and you can still make contributions to the plan up to the overall limit. So it's a win-win situation. The IRS probably put together this auto contribution credit because they probably wanted to increase retirement savings for the self-employed. So they want self-employed individuals to open up self-employed solo 401k plans to save for retirement. So the auto contribution credit, again, it's a total of $1,500 spread out over a 3-year period. So you would file a form 8881 each year for 3 years and $500 increments for each year. So one $500 increment for tax year 2026, a second amount of $500 for tax year 2027, and a final amount of $500 for tax year 2028 for those who have the auto contribution credit added to their plan for the first time here in 2026. So you would file a separate form 8881 a total of 3 times, once for each year. And here's my solo 401k financial. We'll provide a PowerPoint and a video presentation on how to file that form 8881. It's not very complicated to complete. Okay, I don't see any other questions. So that's it for today's session. Thank you so much for investing your time with this. Your time is valuable and your retirement future is worth it. If you haven't yet, please take a moment to like and subscribe so that we can keep building this community. We'll be back here again later today for our second daily session. Until then, have a great rest of the day.